Good afternoon, and thank you very much for joining us today, everyone. I'm Alina Islam, and I'm a mining analyst here at Red Cloud Securities. I'm very pleased to present Libra Energy Materials to you on our webinar today. They are a grassroots lithium exploration company with a portfolio of projects in Canada and Brazil. To give you an overview of the company, as well as discuss upcoming plans, we have with us Kobi Kushner, CEO and Director. Once the presentation is over, we will conclude with a Q&A session, so please put your questions into the chat box, and we'll get through as many as we can at the end. But before we get started, I do need to mention the fine print. For Libra Energy, there may be some forward-looking statements made on this webinar. Please read the cautionary note on page 2 of the Libra Energy corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this webinar does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Libra Energy specific disclosures. And with that, I'll hand it over to you, Kobi. Please take it away.
Great. Yeah, thanks, Selena. It's great to be back on a Red Cloud webinar. Last time I was on the other side, and here I am presenting the Libra story. So Libra Energy Materials, this is a newly public, primarily lithium exploration company. We did something very contrarian, which is we took our private lithium explorer public in 2025. To my knowledge, we're the first lithium company to go public in 2025. So it's quite a different landscape than it was a couple years ago. And in this presentation, I'll explain exactly why it is that we did that. And I really want to pitch investors on three main things. So first one's a strategy. What we're doing makes a lot of sense, and I'm trying to convince our viewers that that's the case. Second is that we're the right team to execute on that strategy. And third, we're the right vehicle to pursue the strategy. So just a summary of Libra. I encourage people to, at the end of this presentation, kind of review this slide. This is a nice summary, but in the interest of people's time, I'll just skip over it for now. This is a part of the macro that I think most investors probably haven't seen. So this is global exploration spend over time across different metals, and things like copper or gold we've been searching for thousands of years, right? And gold always gets the most funding, even in a gold bear market. Gold still manages to attract the most exploration capital. Lithium, however, we've only really been searching for lithium over the last decade or so. So lithium's here in yellow. And I do want to point out a few things. So most lithium mines in production today were actually found usually by accident while searching for something else. Several examples of that. I'm sure people who are involved in the lithium space remember PMET and now known as Patriot Battery Metals, now known as PMET Resources. Their discovery in Quebec, that was not really a new discovery. That was discovered by Virginia Gold Mines in the early 2000s, where they noted some lithium mineralization on surface and continued on with the hunt for gold. And the Tanko mine in Manitoba, that's another example where they were chasing for tin anomalies and accidentally found a buried lithium cesium tantalum deposit. So, the point I'm making is that, most of the stuff was found by accident. What's out there if you now search with purpose? And that's kind of what we did. When we generated our portfolio, it was an interesting time in lithium. Most things were staked up. Basically all known lithium occurrences in Canada were completely staked up. So we really didn't have a choice but to go and make our own new discoveries from scratch. And when we generated that portfolio, we ignored the accidents. We ignored anything that was found already, all existing discoveries. And what we did is we thought more regionally, where should lithium occur, stake it and explore it. And for us, that's been our winning strategy. Per dollar raised into the company, we've come out with more grassroots lithium discoveries than any of our peers with that strategy. So I'll touch on that shortly. But first, depending on which analyst you follow, the deficit is coming back as early as 2026. And even the more bearish analysts still predict the deficit to return by the end of the decade, which is really not that far away. And lithium is such a small market that it only takes a couple mines coming online or offline to be the difference between that surplus or a deficit. So as a result, you can have these wild price swings in lithium, like what we saw in 2022, where prices were unsustainably high, and now I'm of the view that they're unsustainably low. So like all metals, it's cyclical. High prices cure high prices, low prices cure low prices. The big difference of lithium is that because it's such an immature market, the volatility is much higher. So over the last 10 years, 4 of those last 10 years, lithium was the worst performing metal, and 4 of those last 10 years, lithium was the best performing metal. So for us, volatility is just opportunity, right? And we're in this stage of the cycle where consensus is that the bottom is now in. So in this analysis, I've got the bulls in here, and I also have the bears, the Morgan Stanleys of the world. And even they agree that we've hit that bottom in lithium. And I believe Red Cloud's Ken Hoffman agrees with that as well. Consensus is that we've hit the bottom in June. So we took this thing public because I'm no longer afraid to catch this falling knife. We believe that it's uphill in lithium from here. That being said, the lithium equities have still not really recovered. A lot of them are down up to 90% from their peaks. And a lot of them are no longer lithium companies. Many companies have pivoted to uranium or now gold, whatever the flavor of the day is, wherever they can raise money. And some of these companies entered into very expensive option agreements at the top of the market. And some of these assets were really good, but when you enter into expensive option agreements and then the market turns against you, you can't afford to maintain those option payments. So they drop the project, it goes back to the project, the vendor, and the vendor's having a hard time giving away these assets. So you can acquire quality assets for dirt cheap. As an example, we recently acquired our Stimson project in Ontario, which is a drill-ready, noted spodumene and historic drilling, spodumene being the key lithium-bearing mineral. It's next to a 100+ million market cap company as well. That one we got for 50 grand, 100%, 50 grand worth of stock. Like that's how cheap it is that you can get quality assets right now. So we took this thing public because it's way easier to pursue the strategy of M&A in a public vehicle. And going public has just proven to be a magnet for M&A opportunities as well. I mean, it's what attracted Brion into the Libra story, Brion being the Brazilian company that we recently acquired. So again, we're going to keep doing what we're good at, which is low cost, high impact exploration, but we're also pursuing this M&A consolidation strategy, which at the bottom of the market makes a lot of sense. We've assembled a large M&A shopping list, and we've started to execute on those transactions. So the first part is that the strategy of consolidation at the bottom of the market makes a lot of sense. If you look at what major lithium companies have done, so Rio Tinto recently bought Arcadium at the bottom of the market. A lot of major lithium companies today were actually forged at market lows through M&A. Look at before it was Arcadium, there was Allchem and Livent, and before that there was a merger between Orocobre, which literally means copper and gold, by the way, but Orocobre and Galaxy. You also had in the previous lithium cycle a tiny little microcap company called Pilbara Minerals that bought a lithium project out of bankruptcy, Altura. And more recently, they purchased Latin Resources. So again, bottom market M&A. Now Pilbara is a multi-billion-dollar company. So it's not unfathomable in the lithium world to go from a small microcap explorer to being a lithium major in the lithium world in particular. So about myself, I'm a mining engineer by trade. I've spent most of my career underground, a bit into open pit as well, and then I spent a couple years at Red Cloud Securities. My primary area of focus was the lithium space, of course. With me is Ben and Andrew. Both these are geologists that have a master's degree in geology. And Andrew Best, manager of Indigenous Relations. David Goodman is the former CEO of Dundee Wealth Dynamic Funds. He now is a philanthropist, runs an annual event called Humor Me, where he raises money for good causes. And he's our chairman and largest individual shareholder. Zach and Ray. Felipe is a new addition to our board. He's a mining engineer. He was actually he's a Brazil local. So having him support us as we endeavor into Brazil is very important. He was also one of the guys behind Trek Mining. So if anyone knows the Equinox Gold story, how that was born was a three-way merger between three companies, and one of those was Trek Mining. So that was Felipe's initiative. So when you are a sub, call it 30 million market cap company, I believe that investors are really betting on the management team, often more so than the assets themselves. I recognize that most investors are not geologists or mining engineers, and it's might be a little harder to determine the quality of grassroots assets. That being said, there is quite a bit of third-party validation on our grassroots assets. But what I've looked at here, I don't have a track record. I haven't made people millions of dollars before, given that this is my first company, my first business. So what I've looked at is, in the peak of the lithium rush, how much money did our peer Canadian companies raise? And what did investors get out of it in terms of new discoveries, both made or discoveries often acquired? And it turns out that the average cost of a new lithium discovery in Canada, a new lithium discovery being visible spodumene, visible lithium mineralization on surface, the average cost of a new lithium discovery in Canada in terms of capital raised needed to get there is about $5 million Canadian, give or take. That excludes all the companies that raised a whack of money and don't have anything to show for it, for what it's worth. So I'm being very conservative against LIBR here. So remember that $5 million figure. Now consider that in less than 1 year, with less than $2 million raised, Libra found lithium mineralization on 3 separate projects. And the inverse of this is what I'm calling discovery scale. So that's a number of discoveries per $1 million raised, the last column on this chart. And you can see here that we've done incredibly well. We've had no choice but to be very lean and efficient in terms of how we deploy our capital. So that was the second part of the pitch. Consolidation strategy makes sense, and we're the right team to pursue that strategy. Now, the next part I want to pitch people on is that this is the right structure for it, for a couple reasons, okay? So we have roughly 60 million shares out. Because we stayed private during the downturn in lithium, we never had to do those desperate financings loaded with warrants and toxic capital, right? We managed to preserve our cap table such that we still own roughly half of it. Now, what's very unique about the structure as well is that 28 million shares, so roughly half the cap table, is under this, what we call the founders lockup. Okay, so what that means is 28 million shares, including my own, including David's, including Zach, Ray, and others. None of us can sell our stock until there's an actual change of control transaction. So essentially, we're riding this out for terminal value is what we're trying to tell investors. And we're inviting people to ride this out with us. And, again, we raised the money ourselves, so we know everyone on the cap table. So as a result, we've been able to maintain this very tight share structure. We've never issued a warrant. So right now there's 0 warrants. There's no warrant overhang on anything. There's not a lot of volume traded because so much stock is locked up. So it doesn't take a lot of buying to really move the stock upwards. Now, another part of the structure of Libra and something unique about it that is this agreement with KoBold Metals. Now, I'm not sure how much people have learned about KoBold, but I really encourage people to Google, look up who KoBold is. What makes them a bit unique is that they're private, they're US based, but a global company. They've got so many projects all around the world. And what makes them very unique is their backers. They've been able to raise a lot of money, close to $1 billion US. I think their last financing puts them at a approximately $3 billion US valuation. And some of their investors are the big VC funds out of Silicon Valley. They've attracted an unconventional source of capital, such as Andreessen Horowitz, Bill Gates' Breakthrough Energy Ventures. So that includes investors such as Bill Gates, of course, and Jeff Bezos. They're backing this initiative, and it's a mining technology company that's deploying AI and machine learning into our projects. So we partnered with them on 3 of our 37 projects. So these 3 projects are all in Ontario. It's a staged earn-in for up to $33 million. So if they want to earn 75% stake across all 3 of these projects, they have to put $33 million into the ground. There's a few goodies that come with it. And one of them is that we receive, when we're out there in the field, particularly at our SBC project, we receive a monthly income for whenever we're out there during the field season with KoBold, exploring with them. So they've retained us as an exploration contractor for when that field season's ongoing. As a result, throughout our whole go public process, we've been able to be roughly cash neutral. So we've been a revenue generating exploration company, which is very unique. And we were able to maintain our cash position, give or take, during this go public process. Now, this is a lift under the hood. So that was the last part of the pitch, right? So I think that our share structure plus with the KoBold earn-in puts us in a unique spot where we can actually go out and consolidate the lithium space. We've got monthly revenue. We've got other people generating the catalysts and news flow for us with KoBold. And so we can go out there and start acquiring these things for dirt cheap. And part of our strategy here, or just a little lift under the hood as to how we think internally, is that we cast a wide net and we attack a lot of projects. We do a little bit of work. And what's great about lithium in particular is that you know what you have, or at least have a much better indication of what you have much earlier on in the exploration cycle. So the strategy, I wouldn't pursue it with gold. I wouldn't pursue it with copper, but for lithium, I think it makes a lot of sense. Because it's very easy and quick to gauge the geologic potential early on by stepping on the pegmatite or on the lithium deposit. So what we do is we rank our projects on geologic potential, which is the size of the prize. Generally, we want to see potential for at least 50 million tons of material. And to get that, we believe you need pegmatites that are at least 30 meters wide, true width potential. There's obviously exceptions. For example, if you have a stacked pegmatite system where you can drill a hole through multiple pegmatites at once and build up tonnage quite significantly. Latin's Colina, or I guess now Pulvera, would be a great example of that. So we look at geologic potential, which is the size of the prize. The other thing we look at is explorability, which is, okay, if there's a deposit hiding here, how likely are we to be able to find it and advance it? And as things kind of approach the bottom left quadrant, that's where we drop a project. We're not going to keep investing money into it unless it meets our criteria. As things approach the top right, that's where we continue to advance a project. So we're actually now one of Canada's largest exploration companies, one of Canada's largest lithium exploration companies. This is our Canadian portfolio, and I'll just quickly run through this because there's, again, 37 projects in our overall portfolio here, so I can't touch on all of them. SBC, this is our award-winning discovery. We won a Discovery of the Year award for our 2024 discovery, where we found we found 18 spodumene-bearing outcrops in the span of roughly less than 2 weeks. Yeah, a little bit of a staking rush going on in the area. We acquired our Toivo project right along the sub-province boundary. We've got a first mover advantage there. Flanders, this is the first project we staked, also the first one where we found lithium mineralization. It's named after the all-season Flanders Road, which transects the project. Infrastructure's awesome, easy to get to. Our geos who live in Thunder Bay can do day trips out here and go to bed every night. So the Flanders Road is what transects the project area. As a result, we name our pegmatites after Simpson's characters. So we've got the Homer. We also have the Nelson Tantalite discovery. Newest acquisition, this is the one that we just paid 50 grand worth in stock. It's along the same sub-province boundary that hosts the Case Lake lithium cesium deposit, and it's already drill ready. And most recently, we just acquired Brion Minerals, which is a private Brazilian exploration company. That cost us 4 million shares, and roughly half those shares are owned by Felipe, who's now a director and has also agreed to enter that founders lockup agreement. So this came with 30 projects. Basically, with less than 10% dilution, we were able to essentially double our global footprint. I love Canada for exploration, love Canada for lithium and its geology. I love Brazil because it has similar geologic potential. And I would argue that the cost and timelines to get things into production is much more attractive in Brazil than it is Canada. So to give an example, Sigma Lithium went from maiden resource to production in less than 5 years. And that was despite COVID slowdowns. Again, I love Canada, but you just couldn't do that in Canada to go from resource to production in 5 years. It just doesn't happen. The portfolio also came with some other energy metals projects, including a cobalt project and 8 graphite projects in Bahia State. So our projects span Borborema. We also have the Penelope project in Minas Gerais. We are looking at additional acquisitions within the country as well. But with that, I will stop it there, and I'll turn it over for questions. Again, 37 projects to go through. Can't really go through all of them.
Okay, thanks a lot, Kobe. That was a great overview of Libra. So we can get started on the Q&A now. Just as a reminder to everyone on the line, you can type your questions into the chat box at any time. So Kobe, a couple of questions here. I guess, first off, you just talked about Brazil. What are the top 2 projects that you're most excited about in Brazil?
I'd say I'll give you 2. I like Penelope. Penelope has so what happens in Brazil is its exploration is quite a bit different than Canada. In Canada, the glaciers scrape these pegmatites clean, so you can easily see spodumene on surface. I've got a sample behind me from Brazil. So that's spodumene from Brazil. And when you pick it up, it kind of crumples in your hand. So because it's in a tropical environment, it all weathers away. And if I were to send that chunk of spodumene, it's probably not going to grade well because the weathering and what they call supergene alteration has washed away all the lithium over time. So the grades on surface on these projects, you won't find, or it's going to be hard to find high grades on surface. You kind of have to drill, but what you see on surface are good indications of spodumene potential below. So Penelope I'd put up there. The tantalum, which doesn't quite get altered like lithium does, have returned exceptional tantalum grades on surface. These things often do occur together. Another project is one that I can't touch too much on. It's one that we're currently evaluating for M&A.
Okay. You also talked about, looking at other acquisitions in Brazil. Would you look at any other jurisdictions?
Yes, we have looked at other jurisdictions. We've looked at stuff in the US. We've looked at stuff in Argentina. We've looked at other projects in Canada as well. Generally, we've kind of constrained our focus to we've constrained our focus over to the Americas, something that's on our own time zone.
Okay. Question here about Athena Gold. Can you tell us about the shares held in Athena Gold?
Yeah, that's a great point that I neglected to touch on, so I appreciate the person that asked that question. Athena is a grassroots gold exploration company. It's a long story, but Libra had a gold project that didn't fit into our portfolio, so we spun it out into a public company called Athena. And Athena, it's this gold project in Red Lake. In my view, it's one of the most compelling pre-discovery gold targets that I've ever seen. I used to work 10 kilometers from this project. And so we own 44 million shares of that. Last I checked, Athena is at 7.5 cents. So it's quite a significant position. I believe it's 17 to 18% of the shares outstanding of Athena. And yeah, we think I'm biased, but I think it's good paper to hold because Athena is going to be drilling this target in the new year, most likely. So.
Okay, putting aside the projects that are under earning with KoBold, what's your exploration budget for next year?
Sure, we're looking at spending roughly $1 million to 1.5 million. So call that exploration generally is a bit cheaper in Brazil. So call that between now and the end of next year, you're looking at roughly 1.5 million, probably more so weighted in Canada, just because Canada is more expensive to explore.
Okay. And last question here. So is the stage 1 with KoBold complete already, or is that in progress?
That's completed. We did put out a press release a month or two ago that KoBold has hit that minimum threshold already.
Okay. I think that's it for the Q&A, Kobe. So thank you very much for taking time to host this webinar with us today.